Hey guys, so welcome back to the afternoon session where we are going to focus on a more advanced stuff in trading, which is the explanation of TD indicators and my version, which is slightly different that I will go into. Now, there are so many good links in section 6 of Learn Trading of my website. But before I go there, just a quick word on sections 1 to 5. We already covered all of this in the morning session. So, and I do want to point you to, I taught you a fair amount of indicators and a fair amount of ideas of how to do your trading. Now, that is only a tiny fraction of all the stuff that's out there. I only showed you 2 momentum indicators, MACD and RSI. There is literally hundreds. It's like altcoins out there, okay? So what you don't want to do is you don't want to overanalyze your chart and your stock. So this is actually an example of what not to do. So you do not want to have this many momentum indicators to try and guide you into a trade. This is totally unreadable to me, and I don't know who can actually read this. Here's another example of what not to do with drawing an infinite amount of trend lines, along with having, once again, way too many indicators. And finally, here on the left, if you think this is 2 charts, you would be totally wrong. This is 1 chart. Your price is in here with God knows how much stuff in the price chart, plus 1, 2, 3, 4, 5, 6, 7, 8 indicators. Okay. So again, I have no idea if this guy is planning to buy or sell, and just you want to pick out your favorites and you want to stick with it. Now, there might be a lot of trial and error until you figure out what the favorites are, but you really want to pick and choose how you're trading. Now, a lot of these links are very, very useful, starting with this one right here, time to mark indicators. But I strongly want to advise you to read the Bloomberg Market Essentials. If you haven't yet, make sure you do. This is a really, really good PDF presentation. It's about 70 slides, waiting for it to fully load. And it's very, very useful in understanding of the indicator. And there is a minor glitch here. Let's see how long it works. If you click on this link, you get to download the book for free. Okay, I didn't want to like blatantly say it on my website, but I'm saying it here. So if you click on this link right in here, and you have the link to this PDF in Telegram, and definitely just get the book. So the one thing that's different between my version and the official version is the prerequisite of a price flip, and I'll show you why that makes a pretty. It's not a big difference. Like, it only helps me. It doesn't hurt me in my trading. I find it to be a very unnecessary condition to get the setup and countdown. Okay, and this goes over most of the topics. It does not cover intersection, and not much covers intersection, but it does cover, the aggressive 13 countdown, the combo 13 countdown, which should be released by end of this month, and you will all have access to the new code. I'm not actually sure how smooth the transition will be through your IDs. So if you do lose access to the indicator, just check, permissioned indicators, and you might have a whole new one, right? So just be aware of that. So it'll transition smoothly, or I'll deactivate all your access and give you a brand new access to the brand new one. Okay, but you will get it. Right, and this explains it pretty well, so definitely go through this. But I'm going to just go to my chart right here, where some of these things are labeled. And I did the screenshot for when I published the script, and it's there in the script publication. So the way this works is, and okay, how many of you have watched the videos that I already sent you about the TD explanations? Raise your hands. All right, so a little less than half of you. Okay, so make sure you watch those, okay? You already have those videos. I'll send them again in the group chat. So what you have is the setup. Now the way I draw these and the way like Bloomberg draws them are a little bit differently, but the concept is the same. So in order to get the setup, you have to be consecutive. So here it is on the setup, right? So this is the sell setup, which is bullish green numbers that give you a sell indication. Now, the sell indication isn't literal. Sometimes you don't actually need to sell on this. So, but the idea is you have nine candles consecutively where the close is higher than the close 4 candles earlier. And everything I say on the bullish side works in reverse for the bearish side, okay? Or the other way around. Everything I say on the bearish side works in reverse for the bullish side. So we're just going to talk about the sell case, but flip it all over for the other side. Now, you have to wait for the 9 in order to start the countdown, which are the numbers along the bottom. The only exception is in the combo 13, as you saw in the prior video. But I'm not really going to talk about the combo 13 much here. It is in the documentation. So once you have, once it goes up to 9, you get this red arrow. And the red arrow is very, very important. Now, as far as definitions go, anytime the color flips, it's known as a price flip. So over here, when you have a red 1 following a 9, that's a price flip. Again, this is a very powerful signal. Now, the 9 itself on the upside does not necessarily mean that you have to go short. What it means is you have to seriously pay attention that the bullish momentum is probably running out. The more red arrows you have in the same vicinity, the more powerful the message. When you have a 9 and a 13 on the same day, that's a more powerful sell signal than just a 9. When you have a red arrow versus an orange arrow, it's also a slightly more powerful sell signal. This is defined as a perfected 9 when this is just a regular 9. And again, the difference is in the notes and in the readings, okay? It has to do with the high of candles 8 and 9 giving you the swing high. Over here, the 7 is giving you the swing high. That's why this is not perfected, okay? Now, oh yeah, the intersection is here. You actually don't even have the intersection listed here, but I'll briefly talk about that as well. So what happens when you get to a 9? And again, I'm looking at the daily time frame right now, and I think that, as I said earlier, the daily time frame is probably the most useful time frame to me because I use the daily time frame for all my trading decisions. It's how powerful those trading decisions are. The weekly and monthly time frames influence the strength of those trades that are decided upon from the daily chart. And then you can zoom in inside the daily chart in order to execute that perfect trade within a lower level time frame. So what does a 9 mean to me? Okay, so with all things being equal, the 9 basically tells you 3 possibilities. Okay, the 9 is the beginning of an uptrend. It will be ignored and it will continue going higher. A 9 will lead to a short-term 1 to 4 candle correction and then sets you up for the countdown phase in the same direction as the 9, or the 9 will lead to a full-blown correction. Now, all things being equal, which they never are, you can already see that 2 of the 3 possibilities are telling you, hey, be careful. There's probably going to be some kind of a reversal. Whether it's a short-term reversal or a long-term reversal, you still have time to figure that out. And after, if the reversal does happen as you expect, you start reevaluating that trade after every candle to try and identify, okay, is it a full-blown reversal that will give me a 9 on the opposite side, or is it just a short-term reversal that's going to continue going higher? Okay. Now, the higher level time frame can help you. If the higher level time frame is also on a 9, as you will see from the videos, I don't want to jump around time frames here because I did that in the video that you guys all need to watch. I was hoping you'd watch it before you got here, but that's okay. So if my weekly chart is also on a 9 and my daily chart is on a 9 within that weekly 9, I am way more confident that my daily is going to go all the way down to a 9 on the other side. If my weekly is in the middle of an uptrend, let's say a 5 of 9, and my daily is coming up on a 9, I am way more confident in there will only be a 1 to 4 day correction before continuing going higher and meet that weekly 9. That's exactly what happened, and I have a video explaining all of that that you guys have access to. Okay, so my higher level time frame helps me here. Okay, and my smaller time frame helps me time the very top of this. Okay. Now, once I get a 9, a couple of other things will show up. One of them is the risk line. Okay, and the other one is the setup trend line, which I color here in red and also here in green. Now, what is the difference? So the risk line takes the highest point in your uptrend to a 9 and adds to it the range of the candle with the highest point. This has two purposes in my experience. One, if you decide to immediately short off of this 9, this is your initial stop loss because you're literally trying to time the shorting of the very top. And this works in some cases better than others. I was able to publicly call the $5,000 high in Bitcoin to within 1 hour of it happening, actually right there. That was it. I was able to call this live on the World Crypto Network saying, hey, we're at 4,950, and I really think that we're not going to go above 4,975, which happened an hour later, and then down we went, right? So if I was to try and time the very top of the market or the very bottom of the market to the penny, this would be my initial stop loss, okay? It also serves as a breakout point. If we get above this line, I'm anticipating us we go way higher, but if we get back to the prior high, I'm also expecting us to go way higher. So that's the risk line. And again, you'll have this video, guys. Let's talk about the setup trend line. The setup trend line provides also several things. Now, how is the setup trend line being made? Well, the setup trend line is simply, it's drawn after a 9 gets created in either direction, and it simply corresponds to the lowest price in the swing into the 9, okay? So basically, it's the bottom of this candle here is what makes this line. Now, how is it? Now, what does it mean? And of course, it's not always perfect. It serves as support, and you can see how it's served as support. Now, the way it's treated, and it's explained in this PDF really, really well, like there it is on the setup trend line. I see over here it's the 2 candle, not the 1 candle, because that makes the high, but this is to the downside, right? And maybe I'll use this as an example versus my chart. In that, when the price reverses and you have this setup trend line, if you get a 9 in the opposite direction that stays below the that doesn't cross the setup trend line, it's more likely that this 9 is going to lead to a full-blown reversal than a continuation. Okay, so going back to my chart, because the 9 to the downside had candles that closed below the setup trend line disappears, and this 9 was supposed to be more likely to lead to a 1, 2, all the way to 13 countdown. Now, of course, that didn't happen. We reversed and went up to the ups and went back up and formed a 9 on the other end, okay? And once again, we crossed the setup trend line, giving this 9 a higher probability of reaching a 13. So because we crossed the setup trend line, this became a 9 that was more likely to simply give us a 1 to 4 candle correction and then swing us into the countdown phase to a 13 that doesn't have to be consecutive, unlike the setup, okay? Now, I have not found the 13s to be very useful in the world of Bitcoin, but the aggressive 13s have been a much better signal. The difference between the regular 13 and the aggressive 13 is that the regular 13 needs a close higher than the high 2 candles earlier when we're talking about upswings. And the aggressive only needs the high higher than the high 2 candles earlier. So the aggressive will tend to show up earlier than the regular 13, okay? Now, in the latest code, I also added the concept of a deferred 13, and I want to mention that briefly once I find an example here somewhere. There has to be one. The deferred 13 gives you little plus signs. And again, that's also explained in the readings. I can always use it. Here it is. So that's explained in the readings as well. We added it. Basically, just like the 9, the 13 could be perfected or regular. So when the 13 is not perfected, it gives you these plus signs where technically the first plus sign is where the regular 13 would have been, but it defers it with pluses until you get to a perfected 13. And to be a perfected 13, you need it lower than the 8 of the countdown, okay? But again, all of that is also explained in the readings. So how is this useful for trading? I think I kind of covered it all except intersection. Okay, let's get to the, let me briefly mention the intersection. And now that I'm looking at the original work of Larry Williams, who may have predated Tom DeMark in this research, or they might have worked together. I don't know the history. I probably should look into it. So they treated the intersection differently. So now I'm not sure. I need to make a whole video about the intersection. The only place I've really found the intersection explained is if you go to Tom DeMark intersection on YouTube. And there's one video of him actually explaining it. So you can Google this, and maybe I'll have it somewhere, but it's in this video that you guys are going to have, right? So you'll be able to find it. And he explains it fairly well. Basically, the 8 or 9 candles need to swing into the range. So if we're talking downwards, like you see, the high of 8 has to intersect with 3 candles earlier and something in the back of the range, and it's the opposite for the other side. Okay, so so there's 2 ways to think about that intersection. Where am I here? 2 ways to think about that intersection. So you kind of, when you have an intersection, according to Tom DeMark, you are less likely to have a runaway stuff, right? So basically, if you don't have the intersection, let me phrase it that way, right? Like here, you actually didn't have the intersection. So according to him, you are less likely to turn around and go down. Without the intersection, you're more likely to keep going up, okay? Or without the intersection on the downside, you're more likely to keep going down. The Larry Williams's work from the document that I saw from 1980, he treated it differently. According to him, he wouldn't start the countdown until after he saw the intersection. So he saw the intersection as saying, hey, I want to defer my countdown until after the intersection shows up. So he was actually looking for that minor rebound after the setup before anticipating more downside. So they were kind of looking at it completely differently. So I'm not exactly sure how to really utilize that at the moment, but I'm still thinking about it, and more research needs to be done. Now, Again, you have other videos explaining the intricacies of this. Another thing I really want to mention when it comes to this indicator is Wall Street has so many assets to trade. There's literally infinite number of assets across multiple asset classes. And the way I learned this indicator was basically through a trading desk that, ran this thing on every asset known to man. And they only cared about assets that were coming into 9s and 13s. I didn't like to trade that way because I've noticed that 9s and 13s happen pretty damn often. So I wanted to take advantage of that because I was a little impatient as a trader. And I'll show you some of my day trading techniques as well. I was always a little impatient as a trader. Probably was my downfall being a day trader and why I stopped. And my direction neutral options trading is a lot better for me because of my impatience as a trader. Probably also why I've never won a major poker tournament, but I've made it to the final table several times, but never actually won. Always got a little impatient. And because of my impatience, I kind of saw, hey, why do I have to wait for the 9? I can jump in on this trade way before the 9 by looking at 2s crossing above the 1s, or to the downside, 2s crossing below the 1s, or 3s below the 2s, okay? Which is a standard method of trading after you get a 9, right? So that's one of the big differences in that I don't necessarily need to wait for the 9 in order to jump on a trade. But once Wall Street sees choppiness like this, we went red, then we went green, then we went red, they're now waiting for the 9 and capitalizing off the 9. And the sooner you recognize what kind of a 9 it is, the sooner you can act on that trade pretty much, okay? And that's the big difference. Now, let me show you why I don't like using that prerequisite of a price flip. Let me go to the S&P 500. When you have the prerequisite of a price flip, this would not have occurred. This is the recent move of the S&P 500. And if you need a prerequisite of a price flip, you would, like the Wall Street official indicator, would not have a single setup candle here. Because without a price flip after a 9, you can't start any other setups. But I got it with my indicator, and it timed the S&P 500 top absolutely perfectly. Okay? So that's why I really like it. And as you can see, it also timed the bottom absolutely perfectly. And those that watch my videos know I was able to call the bottom right here. This is what I call ducks lining up in a row. I have my 9. I have my reversal candle. I have my 200-day moving average. In fact, I was able to even call it before this was a reversal candle. Between the 200-day moving average and a 9, the odds were already in my favor. When this candle closed with a long down wick, I was very confident at the least you get a 1 to 4 candle correction. And then you reevaluate. And right now, it looks like it wants to go down for a countdown. Tomorrow or Monday is going to be a very critical day in the market. Okay? So this kind of helps you. All right, that's pretty much it on my explanation. Maybe I have a few more. I probably should have taken a little break before starting this. I'm going to let the video roll. I'll probably edit out the break. We should probably take a 5-minute break because then we'll jump into our last session. I'm going to finish up the TD. We're going to go back to our live trade. And I'm going to try to use TD on a lower level time frame. Here's our live trade from earlier, only because it was available to me on a 1-hour chart. And I'll zoom in on this to a lower level time frame to see if this could have been timed any better. But as you can see, this trade is still in the money. And let's see if it can, I don't want it to go down, but it looks like it's high probability to go down. I'm going to leave this rolling. Actually, no, you know what? I'm going to stop it because this was a nice short intro to TD, and I can leave this video as is, and then we'll start a brand new one.